Welcome to the Personal Pension Radio Podcast, where it's all about helping you complete your financial journey to retirement. Discover time-tested strategies and get unconventional insights into wealth building and retirement that actually work. Break away from the herd and go for the retirement you dream of. And now, here's your host, the income engineer, Kraig Strom.
All right. Hello and welcome back to Personal Pension Radio. That's my cue. I am Kraig Strom. Yes, I am the income engineer. And yes, I greatly appreciate you and everyone around the country and a few of you out there around the world downloading this podcast. That is so cool. I love the small world that we live in today. Nowadays, it's just incredible how far a message can go. I hope you continue to enjoy the message. Those of you who do, please go to iTunes, go to SoundCloud, go to iHeartMedia, iHeartRadio, wherever you listen to your podcasts, and please, please, please give me a review. If you'd like to give me a 5-star review, that would be awesome. Now, on with the show. As you might know, those of you who listen, my passion is retirement income planning. And what I mean by that is retirement is a two-part journey. Retirement is the accumulation phase, climbing the retirement mountain, if you will, and the distribution phase, coming down that mountain. I have a passion for connecting the different parts of the journey. Wall Street, in all of their marketing hype, focuses on accumulation. Save, 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 invest, invest, invest. The solution to everything is invest more money. That's just the way it is. It makes sense. Wall Street's business is to get more money into Wall Street. So they really focus on the accumulation side of the retirement conversation. Not a lot of talk about the distribution side of the conversation because that means that you would be taking money out of Wall Street. And of course, that's not good for Wall Street, so they don't spend a ton of money on it. So I found years ago that there was a real gap in the education being delivered to the general public, to clients out there, regarding retirement income planning. That's where my specialty, my niche, my passion comes from. But now, as a financial planner, a certified financial planner, I am also a paralegal. I am a long-time financial planner, meaning that I look at things from a 360-degree approach. Are you headed into the end of the year thinking, man, we're going to pay a lot in taxes? Well, no, you don't have to pay a lot in taxes. Oftentimes, if you know someone like me, if you know a good team of planners, that means your attorney, your CPA, your certified financial planner, the tax code is actually a rule book for paying less taxes. It is. It's a rule book for paying less taxes. We do it all the time. We help our wonderful, awesome clients pay less taxes because the tax code has options. If you are looking at a situation where you're getting ready to send kids off to college again, or you just sent them off to college and you're trying to figure it out, you have questions, I've done that as well. I've got a almost 22-year-old coming up next week off at college. But I've also helped many clients in the college planning conversation and the long-term planning that goes into the finances of a teenager soon to be out there hunting and fishing on their own and hopefully have a career. Estate planning, living trusts, wills, powers of attorney, business planning, succession planning. These are all things that I have done, and I do really well thanks to the team around me. And it's important to know that because, yes, my focus and my passion is retirement income planning. But that means you've got to have all the different components of your world aligned correctly. You can't just have one product or one path in the financial or legal world to make it work as well as it possibly can. That's why I focus on retirement income planning with my background in a very comprehensive, long-term, established career in financial planning. And I say that because it's important to note that there's a ton of folks out there that are, air quotes, financial advisors. There's 700,000+ people out there that could be called financial advisors, but they're not necessarily long-term, certified financial planners and long-term on the job that are actually out there delivering comprehensive perspective financial planning. I say all this again, just keep this in mind. As you're out there seeking information, there's a ton of information available. Pay attention to the source. Pay attention to the motivations of the source, right? Keep that in mind. I was, again, as I said, educated by that Wall Street financial advisory machine. Lots and lots and lots of financial advisors out there, educated by the Wall Street machine. And the focus is accumulation, accumulation, accumulation. I believe that advice is incomplete, and unfortunately, there's a lot of folks out there that kind of give the idea that they are financial planners, but they are really just financial advisors. They're not necessarily fiduciary-based financial planners. Now, quick disclosure before I jump into things. I am, as I said, a certified financial planner. I am not an attorney. As cool as my microphone makes me sound, and the editing software that we use, and the podcast and the radio that I'm coming out of, please don't act on advice that you hear on my show. More importantly, please don't act on the advice from financial entertainers. People that have no licenses, no oversight, no regulatory bodies that are keeping an eye or an ear on them. Please meet with a qualified financial planner to go over your specific information, establish a good relationship, make sure that you're going through the data, your goals, your objectives. Make sure that your financial planner is analyzing and evaluating that information before they then develop and present financial planning recommendations and alternatives. Then, together with your financial planner, implement those financial planning recommendations and make sure that you've got somebody on your team that is helping you keep an eye on it, helping you monitor it, helping you move forward. All right? Now, quick shout out to listener JD back in Georgia. JD connected with me recently and asked for a full 360-degree review. I love it when someone who has done a great job getting ready for retirement on their own takes action and seeks out advice. I love it. Someone like I said, somebody like JD who has really done an awesome job getting ready, still seeks out advice to make sure that he has it dialed in as well as he possibly can for him and his wife. Love it. Hello and shout out there in Georgia. Now, I do have a deal of the week. I have a couple of them this week, actually. I have more car repair stuff. So, yes, I like to do DIY stuff. I build woodworking and home projects and various other things all by myself because I'm a handy guy, thanks to my father. But this week was more car repair stuff. So those of you who listen to the show, I am a Porsche fan, but I do not like paying retail and full price for expensive Porsches. I love them, but there's just no way I can get past the idea of paying so much money for some of these newer, fancier, Porsches. So I have used ones. The used ones that I have purchased over the years are very affordable, no more expensive than an average sedan. It's kind of funny. People don't realize that you can get a Porsche that looks really sporty, sport, and you can get them at a great price. So the car that I have now is higher miles, about 80,000 miles. And I purchased it, as you can imagine, at a great price. And the car came with $2,000 in upgraded exhaust. $2,000 in the exhaust system. And just a little note, folks, if you're out there thinking you're going to customize a car or add any bits and pieces to your car, you have to know that let's say that I was going to put an exhaust system on the car myself. So it would have been, if I had done the exhaust system after I bought the car, it would have been the equivalent of putting a little fire pit next to the car and setting $2,000 on fire. Just set it on fire and just burn it next to the car, because if I had paid for the exhaust system, that's exactly what I would get out of it. I would immediately lose $2,000 because a buyer, myself being the buyer, coming in, I don't care that you put a $2,000 exhaust on your car. It is not worth $2,000. Matter of fact, I don't like that exhaust, or I would do something different. It has zero value. So when I found this particular car in Texas, and I found that it did have an exhaust system that I would most likely appreciate and I'd like to keep it, it still had no value on the car. So the car came with a $2,000 upgraded exhaust. It makes the car sound awesome in tunnels. Yes, I am one of those guys who's basically a teenager who loves to rev my car in the tunnel or a parking garage, right? I used to do it on my Harley Davidson years and years ago. Yes, I did set off a few car alarms in my younger days. Now, this aftermarket exhaust on my car has a design flaw in the bracket system that holds it in place. It had sheared off one of the bolts that actually holds it in place. And that is a serious issue, but it's not worth me pulling the exhaust system off the car. So what I did was I went to the Google machine and I researched a few things. And sure enough, it looks like if I just purchased stronger bolts, that's it. The bolts that were sent were not as strong as they should or could be. So rather than pay a mechanic to fix the problem, I purchased some new, stronger bolts for $5 and did it myself. Less than 60 minutes, and I saved about $150. That's a 97% savings, and I got to wrench on my car. I love to do DIY stuff. Now, the moral of the story? Google it. Whatever it is, Google it before you pay someone to do it. Don't get me wrong, right? I Googled how to change the clutch on my Porsche, and I will probably pay someone to do that. I won't do that myself. There's certain things that I would pay for because it makes more sense to have it done by someone who has done it 1,000 times. I could put the clutch in my car, but I'm not going to. I'm going to have someone else do it someday. But the moral of the story was Google it, because for $5, I fixed the problem with the bracket. Now, second one, I told you I had two. The second deal of the week is my personal shower restoration. You guessed it. I went to YouTube after I looked at, our old shower in this old house we live in was getting pretty bad. The grout had cracks in it. The old shower door was leaking out on the floor, and it had some drywall, that had gotten wet, and this thing needs to be repaired or really needs to be replaced. And in my old house, you cannot take out the old tile shower and put in a new plastic cool looking shower because the doors in the room and all of that are too small. You can't just pull it out. It was built into the house, not like new construction today. So you cannot just slide a new one in. It just doesn't work that way. So I Googled it. I checked YouTube for how to restore my old tile shower. So rather than pay nearly $1,000 for a tile installed shower, and by the way, tile is one of those things I would pay for. It is an art form, and I know I can do it, but can I do it as well as a craftsman or woman who does tile for a living? No way. So I Googled it, and then I looked at comparing prices. That it would cost at least $1,000 to have my shower retiled. It's a pretty good size shower. I spent $150, and I did it myself with an epoxy paint, a special epoxy paint process, and some small grout restoration pieces that I can do myself. And for $150, I'm good to go. It would have cost $1,000. You get my picture here. This is an enormous savings. And funny enough, the money that I saved on my Porsche bracket and not paying someone to get it done for me, I spent on my shower. So the money I saved on the car exhaust repair deal of the week actually covered me for the $150 that it took to do the shower restoration, and it looks fantastic. It is just bright, glossy, epoxy colored looking white. It looks awesome, and we're super happy with it. Now, onward. Last episode, if you want to check it out, I did a short stuff segment on if you love your kids, get them a living trust. I can help. Go back and listen to the last episode if you'd like to get more information about the whole living trust and wills and what I mean by this. But this is one of my sales pitches, a sales pitch for estate planning. And I say it this way: if you love your kids, get a living trust, for crying out loud. Get it done. Get it updated. Get your living trust done. Because if you don't like your kids, definitely don't get a living trust, because they'll live through a nightmare, especially if they live in a state like California, New York, or places like that. They'll live through a nightmare settling out your estate if all you have is a will or nothing at all. It's just terrible. It takes forever. So please, get your will and estate plan done. I can help. Remember, I'm a paralegal at an awesome law firm. I've got a great deal, special pricing for my clients, my listeners, to get their full estate plan done. So send me an email, Kraig@kraigstrom.com, and go back and listen to that last episode on episode 207 on the short stuff segment on the estate planning. Now, watch your step. I've got a lot today on this, and I've got a lot in the show today, but watch your step is going to be just short and sweet. And yes, I get passionate about this. I get excited about this, so please bear with me. This time I want to talk about protection again. I know that those of you who've listened to my show have heard this before. You're going to say, oh man, Kraig's going to talk about protection again. He's always about this. Yes, I am. I am a protection first financial planner. Protection first financial planner. And I believe that's the way financial planners should be. So let's go through this. What I mean by protection first. When you do anything out there, when you're driving a car, when you hear me talk about the mountain climbing analogy of accumulation going up the hill and distribution going down the hill, protection is the first thing you've got to think about. So let's go through some big areas of protection that you've got to pay attention to. Number one, car insurance and home insurance. Car and home insurance. Most of us drive cars. Most of us have a place to rent or a home that we pay a mortgage on. Car insurance and homeowners insurance. Here are the three big things to pay attention to. Maximum liability. Maximum liability, whatever your insurance company will offer you. If your insurance company has your car insurance set with a maximum liability number of $100,000 and they offer $500,000, find out how much it costs for $500,000 of liability coverage. And it won't be that expensive when you follow the second piece of advice, which is maximum deductibles. You want a maximum deductible on your car insurance, for example. It might be $500. Your deductible should be about $500. Why? Because hopefully you will never file a claim with the insurance company for less than $500. And as a matter of fact, if you don't want to be canceled by your insurance company, you really shouldn't file a claim for anything less than $1,000. Because if it's $600, $700, $800, $900 and you have to file a claim more than once, there's a good chance your policy is going to be canceled. Folks, that's real thing right there. The insurance company will cancel you if you have filed too many claims. The insurance companies there's no playing games anymore, right? They will cancel you if you file too many claims. So why not just simply have a $500 deductible on your car, maximum liability, and on your home insurance or your renter's insurance? Think about it. Would you file a claim on your homeowner's insurance policy for less than $2,500? Man, I hope not. You really need that insurance to be there when it's big, bad, a big claim, something that you've got to have insurance for, right? When half your living room burns down, right? Maximum deductible on your house could be $2,500 to $5,000, and lo and behold, your overall insurance premium will go down. because you're not going to file a claim for less than $2,500, maybe in some cases less than $5,000. So why not have the deductible up there at the appropriate level? Also, third piece, add umbrella insurance. Umbrella liability insurance is some of the least expensive insurance you can buy, and it rides above your car and your home insurance and all of that. So please, maximum liability, maximum deductibles, and make sure that your uninsured motorist on your car policy is the same as your maximum liability limits. I see it all the time. People have a $300,000 liability limit on their car insurance, and their uninsured limits, that is the protection for you yourself, their uninsured limit is $50,000. That means your insurance company is protecting you in a situation where you're hit by someone with no insurance, right? They're protecting you for 50 grand, but they're protecting strangers for 300. Folks, make sure that your uninsured motorist is equal to your regular liability coverage. Now, the next piece of protection is life insurance. Make sure that your economic life value is covered for your wife, your husband, your family. And what I mean by that is I have someone that I know recently. His name is Mike. Mike was asking me about life insurance. He says, I don't really believe in life insurance, because my wife and I, we don't have any kids right now. And it's just all about dying. And I said, well, look, seriously, Mike, we were just talking about, he wanted to buy a car, that his passion. He's always wanted this particular car, and he and his wife together make really good income, and they can do it. They can really do it. And I said, well, that's great. But then I turned it back on him, and I said, well, wait a minute, Mike, hold on a second. How much does your wife earn in income? And he said, $160,000 a year. And I said, wow, that's awesome. You got to keep her around. And he says, yeah, I know. And I said, I said, your income is not always, 100% consistent, because he works in the entertainment industry. And he said, yeah. And I said, well, so if your wonderful wife was gone all of a sudden, do you really think you and I would be having a conversation about you buying this car of your dreams? And he stopped and he realized, he said, no. And I said, so your wife has a tremendous economic value in your life. And he said, yeah. And I said, well, that's why you buy life insurance, Mike. You buy life insurance first on the idea and the premise that you are insuring the economic life value of that individual to you. Because truthfully, if Mike lost his wife, or if she lost him, their entire world economically would change. All of their plans, all of retirement, everything would change. They might not be able to afford the home they live in together. They may not be able to live in that same home without each other because the mortgage is too expensive. Folks, life insurance first to cover your economic life value. Do you not know, how do I say it? Are you questioning, what is my economic life value? Well, send me an email, Kraig@kraigstrom.com. Let's have a conversation. We'll talk through the economic life value and how much and what kind of life insurance you should have. And you can get that piece of the moat around your castle taken care of. Finally, disability insurance, paycheck insurance. Disability insurance is probably one of the least purchased insurances that's out there. And anybody who has it or has thought about getting it, I commend you. It is literally paycheck insurance. The paycheck that you bring home, the income that you earn, that is what pays for everything. It pays for your car insurance, home insurance, and pays for dinner, right? And people just don't have their paycheck insured. I love disability insurance. I have it myself. I know that if I was broken, paralyzed, disabled tomorrow, I would still be able to cover the groceries and the mortgage and everything else because I have a disability income policy. If you have questions about it, Kraig@kraigstrom.com. It's Kraig with a K. Now, I want you to watch your step on something else. This is an interesting piece that happened with one of my clients that brought it up that I want to share with you. Some of you out there might be thinking that you either have a rental property that you could do Airbnb with, that you could do Airbnb and rent out a room and things like that. Some of you may already have that going on. Well, here's a big deal with Airbnb that's happening now around the country. And I have some clients who actually purchased a place in Hawaii. And they're later in their careers, and they've done a great job, and they were able to buy a place in Hawaii and turn it into, the whole plan was to turn it into an Airbnb. Well, before you start down this path, please be aware of this. There's a lot of municipalities, city and county governments around the country that are putting their proverbial foot down on Airbnb. Meaning, they're saying you can't do it. You can't do short-term rentals on your personal property. They're coming in and changing the rules. And sure enough, this happened to a client of mine, like I said, in Hawaii, that they had purchased a property to be their retirement home. But in the meantime, they got a great deal on it. In the meantime, they wanted to just simply rent it out, and they'll use Airbnb, and that's the plan, to rent it out on short-term rentals so that other people are helping them cover the cost of owning it before they can move into it when they retire. Well, the municipality, the county, the state of Hawaii changed the rules. They said, nope, can't do that anymore. Whoa, wait a minute. We bought this place, and it's our house, and nope. They changed the rules. You can't do Airbnb anymore in their neighborhood, and they're reeling a bit like, wow, now they've got to cover the entire cost of acquisition. They can't use it as a rental. They could rent it long-term, but then they won't be able to use it themselves. So for any kind of vacations or things like that. So it was a bit of a whammo, right? Next big thing, though, with Airbnb is you've got to make sure that you have the risk protection built into that property as well. If you're successful with being able to Airbnb it, there's a lot of places that you can still use Airbnb and you can still rent out a property. Whether it's Airbnb or just a rental, you have got to follow this advice. Please do this. Put a limited liability company wrapper around that particular property. Make sure that you do not own rental properties in your personal name. Don't do that, because a rental property means that you have the tenants and all of their friends and service providers and whatever else coming into that property. And those are all potential lawsuits. You've got to put an LLC shell, and don't just buy an LLC on LegalZoom. Goodness me. Contact me if you have questions about the right kind of LLC. It's different depending on where you live, depending on how many rentals you have, depending on your personal net worth. LLCs are not all just created equal. You've got to have the right LLC structure, and buy maximum insurance. Make sure that your umbrella policy covers the rental property. Get separate insurance on it. Make sure that you are covered. All right. Now, I want to finish up today with this question that comes up all the time. And it's this idea that the question about buying a house versus renting a house. So buying versus renting, I get this, like I said, I get the question all the time. A friend of mine, somebody that I know here near where I live, he rents a house. And I share this story first to kind of set the stage, because the American dream is you've got to own a home and it's, pay off the mortgage, and that's the American dream. Well, hold on, folks, because economically, that may not be the right thing for you. It may not be the right thing for your kids. It may not be the right thing for everybody. So this friend of mine rents a house. Now, keep in mind, he also runs an extremely successful business, has great income, enjoys all of his hobbies and toys and his wife and kids and all of that. But he rents a house and he loves it. And he was telling this story recently. He said, yeah, the water heater broke, and it didn't just break. The water heater broke recently in his house that he rents, and it flooded a room or two in the house. He said, didn't worry about it. He wasn't on the hook for thousands of dollars to replace it and repair the damage, right? It's the house you live in versus the house you rent and live in. Because the house he lives in, he doesn't have to pay for the taxes, toilets, trash, insurance, bugs, water heater, etc., right? So check this out. The Khan Academy, right? So Mr. Khan of the Khan Academy, if you've never checked this out and you want to actually hear this video that he does videos, years ago started doing videos for kids. It's a great, great story that he actually did videos, I believe, for a nephew. His nephew was struggling with some classes and things in school, and he's an extremely smart academic, just really smart guy. And so he did these cool chalkboard videos for his nephew to help him with school, and it became the Khan, Khan, academy.org. Amazing stuff. And now thousands of videos later on a variety of different topics, largely math and science to start with. But the Khan Academy is all about just education. It's just about the numbers. It's just about the math. There's no politics in it. It's just good, solid education. So it's interesting, when I was searching on this topic and getting ready to answer these questions related to buying versus renting, the Khan Academy of all things comes up. So the note that I want you to understand here is that renting versus buying a home is not just simply the American dream. It's money. Lots and lots of money spent on taxes, toilets, trash, insurance, bugs, just damaged slabs, any number of things, right? It's amazing. It's not about just that one thing where it's the dream. No, if you add up all the real numbers, here's what they said, right? Here's what I'm going to say on a final note. Time horizon matters. But the interesting piece is that Mr. Khan's final thoughts when it came to analyzing buying versus renting was, now in many cases, actually renting is just smarter. And it really doesn't come out where owning a home in the long term comes out that much better than actually renting a home. It doesn't add up the same as many people think. The fantasy of and the amazing status of owning a home that's paid for, the economics do not add up. So my final note, again, was time horizon matters. There are a lot of fixed costs with buying a house. You pay the realtor, closing costs, etc. If you're going to own the house for 30 years, those don't matter much. But if you're planning to sell in a few years, they being all of the costs and expenses, they significantly raise the effective buying price. And if you rent, so much the easier to flee the country when you've got a coming war with Australia, says Emily Oster, Associate Professor of Economics at Brown University. Think about that. Think about that, what she just said, right? But if you're planning to sell in a few years, they significantly raise the effective buying price. And if you rent, so much easier to flee the coming war with Australia. Ludicrous. Emily Oster is a professor of economics, right? Professor of economics. She's not throwing her own political position into this conversation. I just thought that it was an amazing comment. If you'd like a link to the article that I referenced here with her cool comment about the war with Australia, please send me an email, craig@craigstrom.com. But again, to reiterate, there's a ton of fixed costs in owning a home, a ton. And all of those fixed costs erode the long-term rate of return of owning that asset. And then when you have a paid-off house, those fixed costs don't go away. Water heaters don't stop blowing up, right? But if you rent, somebody else is paying for all of that. Somebody else is paying for the taxes. Somebody else is paying for the water heater. All of those things, when you start to really balance it out, what I'm saying here is that renting versus owning is more of a time consideration. That if you're like the average American that moves every 7 years, you may not necessarily be better off buying versus renting. If you're 3 to 7 years moving all the time until you get into your forever home, renting might be smarter, a lot smarter, right? Now, for my mom, renting was not the best thing for her. Neither was buying a home because of her financial situation after my dad died at 58 years old without enough darn life insurance, right? Yes, I am a little bitter about that. I do feel like I should have tried harder to get my dad to buy more life insurance, right? But at 58 years old, he fell into that trap of people like Dave Ramsey say, oh, by the time you're this age or that age, you don't need life insurance anymore. Well, that's not true. And in my dad's case, he really should have had more life insurance. Unfortunately, he didn't. So for my mom, renting was not the best thing for her, but buying a home was impossible. So I helped her buy a home, because we had a specific plan to reverse mortgage the house after she turned 62. So I helped her get a mortgage, which would have been the equivalent of her having a rent payment. It actually would have been a bit better for her to just have the mortgage for 30 years because she was going to have a rent payment for 30 years no matter what. The mortgage was just better. It was fixed. Remember, rent is not fixed. It's going to go up over time. Her mortgage would have been fixed, and it would have been a solid rental payment, basically, for her rest of her life. So we helped her buy a house that we could then reverse mortgage the house, and she doesn't have a mortgage payment anymore. She'll live in the house for the rest of her life with no mortgage or rent payment, if you will, for the rest of her life, and that is awesome for her. That is absolutely awesome for her. So rent versus buying a home. That's my take on it. It's a time factor equation for one thing. Absolutely. If you're going to be in a house for more than 7 years, great. I refinanced my house recently to a 3.625 rate. 3.625. Locked in for 30 years. That's insane. I can't believe I could even get a rate that low. And I'm locked in because this is a house that we will be in for more than 7 years. We're going to be here for more than 7 years. And it's an extremely affordable house to be in. I do most of the DIY stuff myself. So water heaters and fixes and cracks and things like that. A lot of that doesn't worry me because I'm a handyman kind of guy. Now, but we're going to be here for that time frame. If you don't plan on being in a house more than 3 to 7 years, boy, you want to really seriously consider whether you're in a market where you want to buy a house. The cost of mortgages, the cost of owning, all of those things. So let's keep that in mind. Now, next time, I'm going to go through a question here from Peter. He writes this question. I'm going to prep you, give you a little teaser for the next episode. I'm planning on retirement in 5 years. What steps should I take to get ready for taking income from my savings? Outstanding question. Love it. I'm going to go through that on the next episode. Thank you all again so much for listening. All the downloads, please. I'm really making a big push that if you listen to this show on iHeartRadio, please leave me a great review on iHeartMedia, iHeartRadio on your podcast app. Would be super appreciated. I would absolutely love it. And if you have questions about your own personal situation, you want to get your estate plan done, you want to get your retirement income analysis done, send me an email, Kraig, Kraig, at kraigstrom.com. Talk to you again real soon. Take care.
Thank you for listening to the Personal Pension Radio podcast. We took notes for you, so if you missed any part of the show, you can find a full transcript of each episode at personalpensionradio.com. Be sure to download your free retirement income crisis report at personalpensionradio.com. While you're at it, we would appreciate some iTunes love. Please leave us a fantastic rating on iTunes by going to personalpensionradio.com/iTunes. Thanks again for listening. Now for the disclosure. Information presented is for educational purposes only and is not intended for solicitation, sale or purchase of any security or financial product. Be sure to first consult with a qualified financial advisor and your tax professional before implementing any strategy discussed here. The term personal pension refers to a marketing name designed to educate future retirees and retirees about the economic principles behind creating their own pension-like income. The term personal pension is not intended to be confused with a defined benefit pension plan offered by an employer or by a government entity.